So, hello and welcome to the Data Explorers. It's a preview, shall we say, of our London forum on the 16th of March at King's Place. So last time Mark and I did a sort of forum discussion was actually on the sofa over there, and things have come on a little bit, and here we are in our studio. And Mark, first thing to say is welcome, and could you maybe give us an update as to where you could be spotted in public this year, and whose forums you're going to be attending?
Right, okay. It's a good question. A lot of people are asking that. I'm spending less time with Data Explorers and less time with Securities Finance overall, although very much involved in the sort of on the board side. I'm going to a board meeting in half an hour, and I'm very much aware of what's going on. I spend about a day a week, which last week translated into 4 days, and the week before, anybody who knows me knows that's what's going to happen. Yeah. And the kind of things I've been doing, some of you will have received emails about the launch of Whoop Studios and some initiatives.
Thought you'd get a plug in for that.
Whoopstudios.com. and you know, time with the kids and lots of other things.
Perfect. So you'll be coming to our forums, and we can see you in London for that.
Yeah, the forum, I think, for us has been very important. We've been doing them for 15 years, and we've tried to make them serious and to make them a forum in which the industry can discuss the issues. As anybody will know, you've got a lot of sort of competition out there in terms of conferences and half-day things and everything like this. You've got to look at your time, you've got to look at your money, and you've got to allocate your budgets and your time, to what makes a difference. We would argue, and we hope the history suggests, that coming to our events is worthwhile. Yeah.
And so what we've done is we've come up with a bit of a strap line. We have our head of marketing is in New York, but I think she's right. We're going to basically, the strap line for this event is debate, define, drive. And those aren't just loose words, because we do think the content, we spend a month all signing off with a steering committee of about 10 people. It's been a nightmare, to be honest.
Remember well.
What are we going to really get, how are we going to get to the issues most effectively, and how are we going to make sure that it really comes out? So in terms of the debate word, we're actually going to have 2 debates, because it's one thing to bring the issues onto the table. The next thing to do is to then bring them onto a table that really makes people think.
Yep.
And a great thing is to play devil's advocate. And we've got an academic debate, which we won't talk about too much, but essentially we're going to basically throw it out there that stock markets can function perfectly adequately without short selling, and we're going to get 4 academics, 2 to propose that and 2 to go against that, which should be very interesting, because let's be realistic. If the world short selling stopped, would the world stop turning, kind of thing? And let's sort of get these. So there's also going to be a debate at the end of the day, which we can't say too much about, but we'll release later. So there's going to be some debates on the day, which should be good.
Yeah, I'm on the last debate, but the academic debate is absolutely central. It's not an academic sort of vacuous discussion. For what it's worth, having read the literature and spent years working in the industry, I do believe that this industry truly is the liquidity, the oil that makes the machine work more and function more efficiently. But there are arguments that say it wouldn't make any difference.
And there's a lot of great academic research being done. So at the very least, you'll meet these academics, so you can maybe use them at your own events, your own roundtables, rather than just citing the headlines. Actually read some of these papers. Anyway, let's go on to the first kind of main debate, which is, what is the landscape going to look like in 18 months' time? Classic question, but
you've been a bit bullish about this.
I wrote the sort of bull case at a time 2 weeks ago when it looked like inflation was 3.7% here, higher than Zimbabwe, which I thought was definitely worth mentioning, and therefore we could see ourselves with interest rates going up, and that $1 billion of cash that needs sort of to earn a return could obviously
$1 trillion.
$1 trillion could be better served with the higher interest rates. However, since then, the numbers haven't been so good, and it might looks like there's not necessarily. We're sort of going slowly out of a recession. So, Mark, in a slow exit from the recession, what are the kind of positives?
Well, I think the positives aren't to do with cash. I think whether we have a benign interest rate environment for a while, which we may need, certainly in the UK, we've gone negative on growth rather than actually going up 0.5%. We're down 0.5%. So, whilst I think the government might want to put interest rates up to depress inflation, they may not be able to.
Yeah.
The opportunities are to do with corporate restructuring, bank restructuring, European bank restructuring. Look at the money that was made by the beneficial owners and this industry from the Citibank restructuring. Those kind of opportunities may come around again. Smaller, but
structural change in the industry gives the hedge funds something to get
hedge funds,
get their teeth into, which could be a good thing. Okay. Well, we're also going to talk about there is the bear case, which is all these regulations coming down the pipeline, Solvency II, Basel III. The issue is really, do you look at these things now? Do you look at them in the medium term, or do you worry about them later? And that's going to be something to people try and
From a
get my head
trading
around.
desk perspective, you're looking about your day. You're looking at a tactical response with a strategic management looking out over the longer time horizon. For most people engaged in this business, focus on what's going on at the moment, making sure you're efficient, that you're a low-cost provider of assets, that you can be as efficient a provider as possible.
Yeah. So we've got some great people on that panel. Clearly we're talking about hedge funds and prime brokers, and how is that relationship kind of now versus what it was a year ago versus how it's going to be. I mean, one of the big things to talk about here is the multi-prime model.
Mm-hmm.
Is this a good time to be multi-primed? Hedge funds are not quite as big as they were before. Banks want to deal with the hedge funds that they choose to deal with. Or might we be seeing a sort of flight to quality there?
Well, there's a flight to quality in the hedge fund world. It's very difficult to get new money unless you've got a very proven track record or you've come out with your team from a proprietary trading operation at a major investment bank, which there are some very big ones coming out. From a risk mitigation perspective and just good practice, I think most hedge funds will be looking for multi-prime. But the prime brokers want to do most of the business with the ones they really want to do business with and none of the business with us. So there's an interesting dynamic. I think the positive thing from a prime brokerage and a hedge fund perspective is that there's money being allocated, that they have weathered storms.
UCITS 3, there's more money going into those.
And then maybe coming back to the first discussion, we've had events that will encourage them to actually generate significant returns.
Right. Now, we can talk about ETFs. Is a panel where we've had is oversubscribed on the speaker front. Everyone wants to speak
Everybody
on the
wants
ETF.
to talk about ETFs, yes.
It's still a US versus Europe thing. There's masses more ETF flow than Europe. Europe's kind of gaining, and we've got some interesting slides on that. Quick thought on what you're sort of looking forward to on that panel?
I think that the most important thing there is understanding what's really hot and what the industry is doing to increase liquidity, because historically the institutional holders of assets haven't really developed an appetite for ETFs as much as perhaps the retail sector. So we see supply not in the hands of the massive global custodians, but of people such as the issuers and the creators themselves. It's a very, very bright spot in a relatively benign market.
Are you shorting the China Financials A shares ETF, Mark?
I wouldn't comment.
So that's that one. Then there's obviously the real tangible meaty part of the day on the kind of, see if we can drive the debate forward here, is beneficial owners and agents. You know, there's been a big journey they've been on recently, from amazing times, making so much money from cash reinvestment to the Lehman, to trading quite well through Lehman, to a couple of lawsuits or however many might be open. And the question for me is, has the pendulum swung a long way in the direction of the beneficial owners, and is it quite tough being an agent lender at the moment?
I think it's always been tough being an agent lender, and I think that it's never been easy, and you'll see that some of them have gained ground at the expense of others, but it does seem to be sort of a merry-go-round. The customers do think the grass is often greener on the other side of the fence. Yeah. You've seen some of the very largest providers of liquidity, say for example the Dutch pension fund APG, change its route to market recently. They haven't abandoned the agency model, but they've just chosen a slightly different way to access the marketplace. I don't think the balance of power has really changed a great deal. The customer is always right, they get the majority of the revenue, but I think they've become a much more interested consumer. It's as if they've been reading magazines to tell them how to buy the service better. They're more demanding, they're more difficult to deal with. Yeah. It's never
they want
easy.
to know what the risks are more than ever before.
Quite understandably.
Yeah. And you were saying an interesting point earlier when we were off air about sort of you're surprised that some of the GC type clients haven't sort of been weeded out of lending programs. I thought that was quite interesting.
Well, last year at the forum, I'd said something about, I thought it was a great opportunity as the tide came out on the industry, and it's become a much smaller industry, for it to rationalise, and for the supply where we have excess supply in GC securities coming from the smaller funds to possibly be sort of guided gently towards the exit, because you don't need as much of that kind of supply. But it does seem as though the institutions have stuck around, are still engaged in the business, and the agents haven't taken the opportunity to sort of usher them towards the exit and stop participating. It's a bit of a surprise.
That's a good point. And I like your analogy about the tide there.
Thank you.
As our ship comes into harbour and we leave you, it's worth finally mentioning that Steve Sedgwick, I think we can say that from CNBC, is going to be moderating the day.
Really
You and he have a good rap,
yeah.
but it's good to have the sort of He's not a man in the street because he's been in the city, he's been
Yes,
a derivatives trader,
very
but he
much
can
so.
sort of really make sure that if any of these panels don't get to the point, that he brings that out.
Yes,
He gives an energetic,
speakers beware.
pugilistic style
Speakers
to the
beware.
day. Yeah.
No, and I think the other thing that he does get the interaction from the audience, which is very important. He's leading a lot of the discussion. He's channeling one of the big debates at the end, and I'm really looking forward to seeing him.
So it's all the details are at dataexplorers.com/events. Do sign up. It's the 16th of March, and we are hopefully going to debate, define, and drive things forward. Thank you for watching.
Cut.